What's up, YouTube? What's up, Discord? It's been a stupid long month here. Very busy with all the earnings, which is, there's still going to be quite a bit next month. Almost every earnings seem to be pretty wild this month, though, more so than ever before, I think. Like, I don't just feel that way. It really was that way. You had, like, MDB. I posted in the Discord that its average move was 18.5%. It moved 41%, and then the next day another almost 9%. So it moved 50% of the entire company's market cap of all of its existence of all of time. It moved 50% up, so that's essentially doubling the market cap. Like, if it were to fall 50%, it would only take half as much of what it moved up. So a virtual double up. Wasn't a real double up, but virtual. Anyways, it did that in less than 36 hours. Then you had Afrm up like 20%. It did drop a bit, but its average move is only like 5 to 6%. That's it. You had a bunch of stocks going just all double-digit moves. The only one that wasn't double digits to screw everybody was Nvda, right? That's the only one I could think of off the top of my head. Nvda screwed everybody. I'm looking at Mrvll right now. It's in that space. It's in the chips and data center space. AI. It's all part of that, guys. This thing was it was worth literally double 7 months ago. The monthly chart is extremely bearish. You're at a 50% price point right now on the stock. It's like 62 and change, 62.77, something like that. I think my entry was like 63.15, 63.20. So it's down even about 50 cents from when I entered. But like, how do you time the top? How do you time the bottom exactly? It's down almost 19% today. I think they probably take it down 20% because why not, right? Just everything's moving to absolute extremes. But I think, it's all of its price targets are like, for the most part, okay, it has about 30 analysts on it, I think. For the most part, they're like 90, 95. I always value the price target of the JP Morgan Chase analyst the most. Not because I particularly care about them. In fact, I'm fed up and completely with my Chase account in the States. Like, I don't even want it. It's the only US account I've had, and I've had it for 13 years, but I cannot stand that as a bank. They're horrendous. Their customer service is atrocious, and it's insane. If you try to even move $2,000, they act like you're a criminal. So anyways, but the reason I look at their price targets the most, or with the most inquiry, or take it the most to heart, or whatever term you want to use, or put so much emphasis on it, is because they're the largest bank that's tradable. They're over $800 billion market cap, so they're almost in the Meg 10. So the Meg 7 was called the Meg 7 because it was 7 companies, all with at least 1 trillion market cap. For some reason, people still refer to it as Meg 7. Kramer tried to out Tesla because he's he's a weirdo. He's very two-faced. So he tried to call it the Meg 6 for a while. But in reality, it's the Meg 10 or 11, because there are 10 companies that are over 1 trillion. And there's 11 if you include Saudi Aramco, which you cannot buy on the U.S. exchanges, but it's part of that, I guess. JP Morgan is like over 800 billion. It's pretty close to being part of the Meg 11, 12, whatever you want to call it. So to me, that has a lot of weight. So when their analyst, who has 5 stars, meaning out of, maybe this guy's an analyst on 350 companies, means he has high returns in terms of percents, and he is one of the most accurate analysts that exists. Like there are literal 0-star analysts, half-a-star analysts. I'm sorry, I have had something in my eye for, God, I don't even know. This is annoying. 2-star analysts. It's a 5-star analyst, and he's saying 120, and that was today. Almost like 25 of them refreshed their price targets today. A couple downgrades here and there, but like the lowest price target I could even see was $72. So the long-term outlook here is actually insane. And it was like with MongoDB, MDB, they said the price target was like, fuck, I don't even know what this stock is trading. I can't remember what the stock is trading at. Yeah, they said it was like 125 from like $60 or whatever, and it just went to 122 in 2 days. So why Mrvll is why they're saying 72 to 120, and I think the actual highest BT is 140. Why it would go down 19% in spite of all of those price targets is very odd to me. It happens. It definitely happens. Analysts aren't the end-all be-all stocks. We all know that. Just like we know that the charts aren't always accurate. Always. Usually. The vast majority of the time. If you see a descending wedge, it usually breaks out. Ascending channel, it usually falls. Stuff like that. I would say, yeah, sure. It's just one guy. It's not the end-all be-all, but it's not just one guy. It's like 25 analysts saying, with 72 to 140. The stock is $62. That's $10 a share at a minimum, and like $40 a share, $50, $60 a share, $70, $80 a share. No, the all-time high was like 140 something. I don't really believe, or 125. I don't really believe in that at all. Their growth is great. Okay, their growth is it's crazy. The stock is down 19% today. They reported 59% year-over-year growth. 59% growth. It's insane. And their projected average growth rate, industry consensus, is 19.7%. So it's not like they're going to go anywhere or go down anytime soon. They're going to keep growing. They're major partners with TSMC, Taiwan Semi, basically one of the leading chip manufacturers in the entire world, right? So why wouldn't you be buying that dip? To me, buying it here at 60, and I have charted it that I said it can go to 58, and I think I want to say 44. So there's still room for a big drop. If it goes down there, I'm down thousands of bucks, but I will still be adding to it, not just out of like respect for the profit they're bringing. They're bringing in over $2 billion, guys. Every one of these companies that's been bringing in $2 billion revenue has been skyrocketing. I don't know what the vendetta is against these guys, but they're an American company. They're in like Missouri or something like that, or Missoula or some shit. I don't know where they are, but they're in America. Okay, that alone is another, for me personally, bullish sentiment. You got Trump backing Intel massively. You got him giving every incentive under the sun for companies to use America. Doesn't mean it's going to be cheaper for anyone, for customers or for businesses, but he's providing incentives, right? Incentives is what draws business in, right? And investors, for that matter. Just look at Canada. We have everybody leaving, and you guys have everybody coming, whether forced or otherwise. But that stuff matters. So if you talk about a Fibonacci, we're at that 50% right now. So right now it's coin flip. Are we going to go down to 23.6, or are we going to go back up to 70, right? 71.8 or whatever the hell the other level is. That's why I flip the coin in the bullish side. I'm rarely bullish. I normally, like right now, overall market, definitely bearish. Nvda is a solid $135 to $150 overpriced. Guys, It was $90 in April. 90 in April. 3 months ago. $90. It's doubled. And it was $10 in 2023. There's been multiple stock splits. You're not getting a good deal on Nvidia at 175. It was $10 2 years ago. The company has not changed that much in 2 years. I'm sorry, it just hasn't. So, I mean, you've got Meta at 750, Microsoft at 500, which spent decades around $40 a share. Okay? You have all these major tech companies that are holding up the whole market, grossly overvalued. And you have this one, right, that's lower. So what happens when stocks start falling is the money doesn't really leave the market necessarily. It just shifts. Maybe it goes into industrials. Maybe it goes into consumer cyclical. Probably not here, because why would you invest in consumers when you are replacing all of the jobs with AI and robots and people are strapped for cash? You look at Afrm, it's telling you borrowing is at an all-time high. Buy now, pay later is going in berserk. They're making money hand over fist because no one can afford shit. They've got buy now, pay later for groceries. They have buy now, pay later for DoorDash, which is insane because DoorDash is grossly overpriced as is. I'm pretty much fed up with it and don't really use it anymore because they keep raising the prices and all the fees and shit. It's even when you're subscribed to them, they still have fees. They totally lie and tell you don't pay any fees. It's a total lie. Because tax is 5%, and then with the fees that they say, they're like, oh, taxes and fees, and then it's like 11 or 13%, and it's like, what are you talking about? I'm a member, and I pay you $120 a year, and if you have an Amazon, you don't pay, so go through Amazon. I just found that out. But anyways, needless to say, borrowing is an all-time high. If borrowing is at an all-time high, consumers are strapped. But you have this company, Mrvll, which is already downtrodden. Right? So if money is going to be flowing from areas of overbought, it's going to be looking for areas of oversold, in my book. So if you want to stay in the chips and the AI and the semis, you're going to go from the Nvidias, from the Metas. I'm pretty bullish on Google, even though it's very high. So I'm not going to include them, but TSM, CoreWeave. You're going to Palantir. You're going to go from there into the Mrvlls, right? So that you can just get some gains there while everything sorts itself out. And then you can leave the Mrvll and dip buy Nvidia when it's 100 or 75 or 40 or 20. If Nvidia went to $20, it would still be up 100% from 2023. The average return of the S&P, guys, is 7%. So if Nvidia sold all the way to 20 from 175, you'd still be outperforming the S&P overall, assuming you had it in 2023. You'd be outperforming them by 93%. Don't think it can't happen. Look at some of the stocks out there. Look at Mrvll. 7 months ago, $125, $130. And here we are, 7 months later. I would imagine after today's move that investors, the majority share investors, are going to be looking to get rid of the management, the CEO or something. There's going to be turnaround talk and all that stuff. So that'll be coming too. If the CEO gets ousted, usually the stock drops right then and there, and then when they find a new CEO, it balloons usually. And the CEO thing is like a big circle jerk too. All the CEOs, guys, it's like a big secret society thing. They all just go from one company to another. It's pretty wild. If you've ever done any research on it, it's not like the vast, like almost never is it like someone who starts in a position and then works their way up. You do get a lot of CFOs that become CEOs, but you rarely get a guy that's like, I've been in the company 10 years, I moved up to management, I moved up to district manager, I moved up to general manager, I moved up to CFO, I moved up to CEO. It happens. It really does happen, but it's like one in a billion. It doesn't happen very often. So they just find other CEOs. So I'm sure they find one of the CEOs that they like and instill them. Because I can't see a stock falling 50% and they aren't like, okay, CEO, you fucked up. You got to go. Right? It's just, it is what, but that's going to begin their turnaround story. Okay, we got rid of the CEO. We've addressed these challenges. We don't even have challenges. We're fucking 59% growth during the challenging time, during the time with all the tariffs, during the time with anti-China Trump sentiment, during the time with questions surrounding AI. 59% profitability and growth. Like, I don't know what more you could ask for in a company. Oh God, I hope I can maintain this enthusiasm if the stock falls next week. It's a short week. Usually, after a holiday, stocks pump or rally. Unfortunately, there's this pre-built notion that September is a bad month. I can't stand that myself. But if September is going to be a bad month, that means maybe on a short week, next week, maybe we see some more selling. Especially since Nvda did deliver. It did deliver. It came in line. Okay, it did deliver. It's an incredibly profitable company. I don't deny any of that. It's just an overvalued stock. Those aren't the same thing. You can have an incredibly valuable company that's overbought and the stock is too high. BE, okay, ticker BE. The PE is 500. The forward earnings is 100x. That's a fucking short. Okay, it's an energy company getting into the data center side, doing, pretty decent sales, but the stock is way, way, way overvalued. Plug Power, $1.60. Nucor Energy or something, it's like 25. Oxy, 47, right? This stock is like 53. It's barely been on the planet very long, and it's nowhere near the size of Occidental Petroleum, right? So, if you want a stock that I think is a value play, it's Mrvll, and if you're worried about the stock falling and you can afford 100 shares, you can sell a put. So you could look to September 5, you could look to September 7, 8, 9, 10, 11, I think it's 12th. You could look to 2 weeks out. You could look to the 3 weeks out, which would be the monthly contract. And you could sell, because you want to sell the put when the stock falls. When the stock falls 20%, you want to sell the put then. Because if it recovers at all, those premiums are going to get wrecked. Just like a call. You want to sell a call when the stock is pumped. Like MDB pumps 49%, you sell calls. You don't fucking buy stock, and you don't buy, you could buy puts, but if you were really bearish, you could just sell calls if you wanted to do it safe. So with Mrvll, you look 3 weeks out or just next week, whatever you want, whatever you're kind of comfortable with. And then, you sell a put. You look 3 weeks out, I'm willing to bet a 44 put still pays over $1, so $100. And 50, what did I say? 58 was the other support. 58's probably paying lots. It's probably paying like $3, $4, $5. So $300, $400, $500 to be able to buy Mrvll for $58, because that's what will happen if the stock falls in 3 weeks' time, and you sold a 58 put. Stock falls to $57.99. You get assigned 100 shares for each put contract. A put is 100. It's a contract. I agreed to buy your shares for $58, and I want 100 of your shares. They only come in hundreds. I think they're going to change that at some point and maybe make them like 50, right? Something that is a little more retail friendly, because retail is a driving force in the markets right now. And they've had to come out with a lot of things like TSLX and shit like that. It's like, because like if you can't afford a $20 Tesla option, you can buy a $2 TSLX option. So rather than have that garbage, they could just lower the options to being like 50 contracts or 20 contracts or even 10 shares, right? One contract represents 10 shares. Whatever. Right now it's 100. So that's what you would say. I'm going to sell the put 58. Stock falls $4. Unlike me, who's just lost thousands of dollars because I have hundreds of shares, you didn't lose anything. You got paid your $300, $400, $500. You got paid that today, so that in 3 weeks, close to the end of September, you're going to be buying it for 58. Now, if you're bullish, you just buy the stock, or you can sell puts right at the money. If it's at 62.50, sell at 62.50. I don't know if they have 50 cents on this one. Sell at 62 or sell at 63. Whatever. It's the same shit. We're talking a difference of 50 cents, so who cares? So if you're bullish, you could do that. And even if you're bullish, you can still sell 58 and 55. It's a bearish strategy, but it's just a means of protection, price protection. You maximize, sorry, you cap your profit, because if it stays above 58, the best you'll get is whatever you were paid. Whereas me with shares, profit is infinite. If the stock rallies back to 70, 80, I'm up 10, 20 bucks a share. You just got your $500 per share, right? And at 100 shares, $10 a share is $1,000, and $20 a share is $2,000, right? So owning shares has more risk and more reward. Selling puts or selling calls has less risk and far less reward. But that's it. That's my video for you guys. It's been about a week or so. Discord, I've been in there every day, all day. I tried to take a vacation. Didn't work. 4 people quit. As always, it always happens. I literally took an afternoon off and like 4 fucking people quit. Their loss. It is what it is. Hopefully we get some new members in. As always with this video, maybe something happens with Mrvll. It pops, or maybe BE falls more, or, I've given actionable information on this. Nvda, I'd be selling the shit out of that right now. I would not be holding that. There's no reason to hold it. Even if it goes to 200, I don't give a fuck. I'm not interested in it. Looking at those charts, when it's 90 in April, I don't care. I don't want anything to do with it at this price. And it's going to bring the whole market down if it falls. That's an extreme risk I don't want to take. And I've heard people say, oh, well, I've heard them naysaying, and I've been holding the whole time. I'd say your point is valid, other than the fact that you're trying to compare 4.5 trillion Nvidia to 2 trillion Nvidia in April to no trillion in 2023. Nvidia wasn't even a trillion in 2023 at $10 a share times 25 billion shares, guys. Nvidia was $50 billion. $50 billion in 2023. It's 4.5 trillion now. And people, they hear the words and they don't understand the difference. Go on Google or go on Grok and say, please describe to me in time, in seconds or days. And you should go with days, because it's big. The difference between a trillion and a billion, it's like 11,000 days to like 100 days. It's fucking crazy. So the growth of the company is illogical by every metric at this point. You don't go from 50 billion to 4.5 trillion in 2 years and 1 month. I'm sorry. The bottom is going to fall out of that. And the fact that all the Meg 7 are all each other's best clients and best customers that's kind of how a Ponzi works. The only thing keeping them up is new money. People willing to buy Nvidia at 175, hoping for 200, hoping for 25 a share on a company that went from 10 to 175. How about you buy some Mrvll at 60 and hope for 125, 200? I don't know. That's what I would prefer to do. You do you, though. I'm sorry, I kind of got on a rant, on a tangent on Nvidia at the end there, but it's fucking wild. And if September's a bad month, Nvidia is going to be the company and Meta to lead us down, because their weight in the S&P 500 is extreme. It's like almost 40% now. They need to remove them from it entirely at this point, because it's kind of messing up the entire S&P 500. They need to take them out and add 10 new stocks. And by the way, I believe we have a rebalancing today, which will be any minute now because the market is almost closed. Free.